evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 5th, 2012. We have a lot to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Let's just do a quick rundown of what happened today. From Friday we came all the way down and we pierced the 200 moving average and actually closed below it. And then yesterday we came back up and then we retagged the 200 moving average as if it was resistance, and it was actually resistance. Today, however, we've actually broken through the 200 moving average and closed above. This is telling me that the 200 moving average is holding. If we had closed below this candle here, then the bearish sentiment for me of coming straight into this 123.13 level was a lot stronger. However, we did have this pretty strong gap fill support here, including the 618 Fibonacci retracement, which I mentioned in the earlier videos. That is the strongest Fibonacci retracement level, which is the 618. We did get a pop today, and let's take a look at other things to see if we can validate this pop through tomorrow. Okay. Again, even if I say that it looks like that we may continue higher tomorrow. This is a counter trend trade. If you do counter trend trades, it's a lot riskier. It's like pissing in the wind. It's possible to do. It's just going to get messy if you're unable to do it. So better yet, go with the trend. You want to go with the current, and you just want to be safer. If not, you want to play a little bit more riskier. Then the counter trend trade is definitely possible. Alright, this is the chart of the US dollar. Let me load my drawings in here. Okay, so just a brief history for those of you who are just starting to watch. I have this level here at 85.23, which is a level I still think the dollar can get to. Right now, what it looks like is the dollar came up, we consolidated, came up, consolidated, and we're up again, and now we're consolidating again. And earlier in the videos, I said that we're definitely overbought on the dollar, and we kept moving up. Eventually, we're going to need to move into this 20 moving average. Whether or not we do that was a question, and it looks like that there is a possibility that either the 20 moving average will come up into the dollar when the dollar goes sideways, or the dollar will just come straight down into the 20 moving average, in which case that should give the markets a little prop higher. Now, if you kind of look at this in a smaller way, we did have a down move, and what this looks like now, if we get another candle this way, this is actually a bearish consolidation. Okay, so with this bearish consolidation pattern, I mean, because we're just right above this 20 moving average, there is a very slight possibility. Again, this pattern is not complete yet, but there's a possibility that we may break down from this 20 moving average and then see support around this level. But I'm pretty sure that maybe around here would be pretty good support for the dollar. If it can get through the 20 moving average, we come down into here and then bounce higher and then possibly get into this 85.23 level here. Okay, so that's the dollar. Basically, it still looks like the dollar could go a little lower, and if it does, then the markets will catch a bid. Now, if this dollar is just consolidation pattern from here, and then if we shoot straight up, then we're gonna find resistance here, but this resistance point is now minor. Okay, the first time we come into this resistance is going to be a major resistance point, as I mentioned in the previous video that this is major resistance. The second time it hits it, doesn't matter if we get a bounce down, fact remains that it's still a minor resistance point after the first time it goes into it. Okay, so there is a possibility, because we consolidated right below it, that we could break through this resistance point on the second time around, or we might just have like a bigger bullish consolidation pattern before going higher into this 85.23. Okay, regardless, the fact remains, the dollar does look like we could have a possibility of tagging this 20 moving average, which will give us our counter trend bullish sentiment on the SPY. Okay. Alright, this is the chart of the VIX. I had a level here at 28.64. It does not look like we're going to get there at this time. Well, we did break down from this 200 moving average. Next stop would probably be the 20 moving average, okay, before we get a bounce. So right now, it looks like fear is being pulled out of the markets, which is definitely giving the markets a little bit of a boost, which is what we saw today. This level here, I mean, 28.64, it got close to it, but it really didn't tag it. I wouldn't even say that this was a kiss of it. So yeah, there is a possibility that we may reverse or bounce off of this 20 moving average and go right into this 28.64 level. Okay, and as we all know, same like the dollar down, markets up, dollar up, markets down, and the VIX is the same way. When there's fear, the VIX will rise and the markets should shoot down, and when fear is being removed from the markets, and the markets turn a little bit bullish, at least for the short term. Okay. This is a chart of gold. This is the ETF, just the GLD, which is the ETF that tracks gold. Right now we have this resistance point, which is right into this gap fill and this 50 moving average. What it looks like to me right now is gold is, even though gold went down 18 cents today, gold looks like it is just consolidating sideways for another possible push higher. Okay, we're gonna need more time. I mean, after the second candle to the side, there is a possibility that we may already shoot up. That's the earliest I've seen it shoot up is on the third candle, which is, so we have one, two, and then now we have one more candle to shoot up. I don't see it happening very often, but it does happen. And then with a move this big though, I would think that we would need to consolidate a little bit more before we get to this 162.22 level, in which case I'll take a short. Okay, so that's it for your 7-minute market update for the markets. Now let's talk about some stocks here. Before I do that, though, I guess the question remains: what do I expect tomorrow? Well, yesterday we had this, kind of like the spinning top candle here. Today we had this somewhat of a bullish engulfing candle. I mean, we didn't engulf the whole candle, but we did engulf the body of this candle. But like I said, we didn't do it on good volume. Because we didn't do it on good volume, it tells me that this could be a bull trap. Okay, so basically, when this 20 moving average comes down into price, kind of like how it did over here, then I expect the SPY to come all the way down to this 123.13 level, okay, which is definitely a possibility. So keep in mind it's a counter trend trade. So to answer your question, yeah, I wouldn't be surprised if we continue higher tomorrow. We may actually continue higher for the next couple of days. Only time will tell. But right now everything does look a little bit on the bullish side, at least for the short term. Okay. All right, now for some stocks. JP Morgan is the leader for the finance sector. And then let me remove these lines here. We almost came very, very close to this level here, which what I mentioned yesterday was a $30.31 level. And we already got a bounce, and this is a very nice reversal candle. It slipped my mind. There is an actual word for this candle pattern here. Piercing would be bearish. I forget what the pattern is here, but this is definitely a reversal pattern for the candles. It would have been much better, however, again, if it was on volume. We did not get it on volume today, so this tells me that there is a possibility that this may just be a one-day turn. And because the finance sector, which is JPM alone, caught a bid today, that obviously helped the markets go a little bit higher. However, if JPM goes into this 34.04 level, then I'll probably be shorting either the markets or JPM, and hopefully it lines up with the markets. When the markets are ready to short, then hopefully JPM would be ready to short at the same time. I probably won't take both shorts, but I'll probably take either the market or the JPM. It depends which pattern looks better. If it does coincide with each other on these two calculated levels here, we will see resistance at this level here. So we just have to keep that in mind. Plus, this 20 moving average is coming down. So I just kind of wanted to talk about JPM because I know I mentioned that in the previous video, that this level here is no longer valid anymore. I wasn't able to get into this level to the exact penny. So I mean, it didn't even trigger my alert, which was at $30.64. So it's off the table already, in my opinion. So I wouldn't go long on JPM right now, even if it was for the short term. I think at very most, if it does hit this level at $30.31, I may take it as a day trade for a quick scalp. It depends on the pattern though on the 10-minute chart. Alright, this is a chart of Facebook. Facebook, let me load my drawings here, went right into my level here, which is $25.78. The low for this candle here on the top left screen up here, you'll see that the low was $25.75, so I was about 2 cents off. Okay, so I took this trade as a long trade. Again, this is a very high risk trade, so I didn't really put very much into it. The reason why it's a very high risk trade is because this support line is nothing other than a a calculated level here. This is just a mathematical calculation on this level here that tells me that there's possibly a support level at the 25.78 level. Also, we're in a downtrend, so that adds even more risk. But you know what? I'm just I have a real small position in Facebook right now. I took a long position at 25.78. We'll see what happens tomorrow. I mean, we I have no idea if it's actually going to bounce or not. I'm just going based off of one indicator here, and or one factor I should say, and you really need more than that to take this trade. But Facebook is a new stock right now. It recently went IPO, so I can't get any support levels from anywhere else anyway. So we'll see what happens tomorrow. I'll definitely keep you updated. My stop is any close below the 2578 level. Okay, any stop below the 2578 level, and I'm out. Okay, which means very small loss if any. All right, this is the infamous Walmart here. We finally got a trade, a negative number on Walmart. That actually, well, I should say a red candle on Walmart. We closed, the low today was 65.43, and interestingly enough, I still have this calculated level, which is 65.47. I mean, it's just basically trading up and down, up and down. It's bouncing all over this place, right on my level here. Again, still this. Chart is now showing weakness. Interestingly enough, all this time is showing a lot of strength, but the markets was super high today. Well, not super high, but I got a pretty good bounce today. And then Walmart came down, so it could be signaling that Walmart could be coming down. The only thing that's telling me that it could come down is this candle here with this volume here. So there's definitely a possibility that we may break through or break down from this 65.47 level. However, looking long term, we are still consolidating for a possible up move to the 67.70 level. Now, consolidation patterns I noticed fail a lot more when you have candles such as this on good volume, and when consolidation patterns do fail, they fail very big. So if we get a pop in the markets tomorrow and Walmart still closes below the 65.47 level, I think Walmart's done. And as soon as markets pull in, then Walmart's gonna take a huge dump. That's just my opinion, though. I'm still not going to take the trade until it hits this 67.70 level. You have to stick to your rules. Once you break your rules is when you lose money. Okay, that's Walmart. All right, last but not least, we have this is a daily chart of Caterpillar CAT, and I do have a level here of $80.51. I'm still gonna take probably a swing long. We are in oversold conditions. If we tag this $80.51 level tomorrow, then I may take a position on the long side. It really obviously really depends on if the hourly or the half an hour chart. I really don't like looking at the hourly charts because there's only 7.5 hours that the markets are open. But the half an hour chart, however, if it's showing a reversal pattern, then I may take CAT for a very short long-term bounce. I'm sorry, a very short long position counter trend bounce. Okay, and my bounce would probably take me all the way up to the 618 level as a retest. Okay, so that is your 7-minute stock market update, and God bless to you all. Thank you for watching, and I hope to see you in the next video.